Welcome to weekly view on markets. Markets were highly volatile during this week due to trade war. Market fell sharply in the beginning of the week as China imposed retaliatory tariff on US goods. By the end of the week, Trump put a hold on tariff for 90 days to allow for negotiation and this lifted market sentiment. Further, Trump has exempted electronic goods like semiconductor chips, mobiles, and laptops from tariffs at the weekend. So, this will have a softening impact on the market. This softening stand will be encouraging for the markets in the coming week. RBI has reduced interest rate by 25 basis points during this week and changed the policy stance from neutral to accommodative. So, accommodative policy stance is good, and this indicates that RBI may cut interest rates further in coming months to support GDP growth. Overall, still the worry about global GDP growth or GDP slowdown and trade disruption still remains. Investors should not panic and they should hold on to their investments. In few months, the trade war situation will ease and countries will negotiate and some clarity emerges on this front, then the market will take a direction. Markets will bounce back as some clarity about trade tariff and earnings of the companies emerges. Till such times, investors need to have patience. They should hold on to the investments. The peak of the trade war is already happened. So from here on, I see improvements in negotiation and some solution will emerge. Now let us look at performance of indices during this week. Nifty closed at 22,828 with a loss of 75 points, that is 0.33 percentage. Even though it looks like market has consolidated, there is a huge fluctuation during the week. Markets were highly volatile and India VIX, that is the volatility index, has gone up by 46% during this week. Volatility index has moved from around 13 to 20 in 1 week. This shows the panic that is there in the markets. Bank Nifty has closed at 51,002, lost 500 points, that is 0.97%. Mid cap index lost 144 points and closed at 50,501. Small cap index gained around 20 points, closed at 15,696. Markets have markets have staged a smart recovery on Friday as Trump has announced 90 days pause on tariff. Now let us look at sectoral performances. Consumer durables, FMCG sectors gained more than 3%. Manufacturing, public sector stocks, oil and gas sector, media companies, energy sector all gained around 1 to 2%. Commodities, infrastructure were consolidating with small gains. Realty sector lost around 4%. Metals, information technology sector lost around 3%. PSU banks, private banks lost around 1 to 2%. NBFCs, healthcare sector were consolidating with minor losses. So there were almost equal number of sectors gaining and equal number of sectors losing this week. But within the week, volatility was very high. The fear index, that is India VIX, has moved up by 46%. So this indicates that there is a panic among investors. India VIX going up to 20 from 13, that is almost jump of 46% in 1 week, shows that there is a panic among the investors and there is a nervousness in the market. But what I feel that the passing of tariff for 90 days and at the weekend, Trump has announced exemption for electronic goods from the tariff. So this softening of the stand will be good for the markets in the coming week. So I am hopeful that the market will form a panic bottom around the current levels. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see market fell, but this was the previous low, and technically Nifty has respected this previous low, even though it fell below 22,000 level. It has staged a recovery and closed at 22,200. And from there, we have seen a smart recovery during this week. The latest developments on tariff war indicates that the market may have formed a panic bottom at around 21,800 during this week. But we need to wait and watch for 1 or 2 more weeks because the situation with respect to trade war is still volatile. If negotiation starts, then what I feel market has from the bottom at around 21,800 levels. And if negotiations starts, then we will see a recovery in the market from these levels. This is the chart of Nifty mid cap index. Mid cap index also went below 47,250, but it managed to close above this bottom formed earlier, closed much above that. It closed at around 48,750 on the first day of the week. And after that, we have seen it has been volatile, but the direction is up. So we'll have to wait for a week or so. When Nifty mid cap index crosses 51,000 level, it will come back into this channel which I had drawn earlier, and market will have more confidence. This is the chart of Nifty small cap index. Small cap index also fell below 14,500, that is the previous low, but within the same day it has gone above 15,000 and closed above 15,000. And after that, even though there is volatility, the overall direction seems to be up. So if Nifty small cap index crosses this resistance level of 15,000 to 15,800 and goes to around 16,000 level, then the investors' confidence will come back and probably the India VIX also will reduce and we'll see further confidence coming into the market. This is the chart of Bank Nifty index. Bank Nifty index fell out of this channel and from there it recovered and Now it is coming back into the channel. Mm, I expect with a RBI rate cut and other things and accommodative policy stance, which is favorable to the banking sector, Bank Nifty may pull back and trade within this band of 51,000 and 52,000. If it crosses 52,000, then we will see a further rally in Bank Nifty coming week. Now let us look at some of the macroeconomic and market fundamentals. India's macroeconomic fundamentals continue to be remain quite stable. RBI forex reserves has gone up by 10.8 billion US dollars during this week. It is at 676.28 billion US dollars. Quite a comfortable position for RBI. Forex rate is at 86.05 rupees for $1. After hitting at around 88 levels, it has come down to 86.05. Smart recovery in foreign exchange rate. This has happened because the dollar index has come down. It is at 99.89. It has come down below 100. The dollar index, when rupee was at 88 rupees per dollar, dollar index was at 109. Now it has come back to 99.89. So overall, the dollar demand for the demand for dollar globally is coming down. That is indicated by the dollar index. That is why we have seen strengthening in the rupee. And crude price has dropped much below 70 level. It is at $64.76 per barrel. Lower crude price is good for Indian economy. RBI is confident that inflation would come down in the coming months. They have projected that the inflation may come down to 4% level, and that is why they have changed the policy stance to accommodative, and they have already given 25 basis point rate cuts two times. That is, repo rate has been cut by 0.5% so far, and some more rate cut we can expect in the coming monetary policy committee meetings. Gold price have it all time high. It is at 95,670 for 10 grams 24 carat. Due to the global uncertainty, the demand for gold has soared. Gold prices have gone up by more than 30% in last 1 year. But whether this kind of rally will be sustaining in gold, I don't think. Gold should stabilize around these levels, and gold has already given returns of 2 to 3 years. The long-term return of gold is at around 8.2%. Since gold has given huge returns in last 2 years, gold may stabilize or may have give small correction in coming 2 to 3 years time. So investors, those who want to invest in gold, need to be careful at that level. FIIs have sold 20,911 crore during this week. DIIs have matched that selling and they have bought 21,955 crores in equity during this week. Tariff war accelerates between US and China. China has retaliated. Markets saw deep cuts on Monday and Tuesday. Trump has deferred the tariff for 90 days to allow for negotiation. That has given some hopes to the market. Markets have recovered on Friday. Further, at the weekend, Trump has exempted electronic goods like semiconductor chips, laptops, mobiles, etc. from tariff. That is a good development. So this will have good impact on the markets in the coming week. Trump is facing opposition within US as prices have started rising in the US due to high tariff, and market crash has also hurt the US common citizens because many retired people and common investors have invested in the US stock markets. 67% of US population participates in the stock market, whereas in India only around 5 to 6% of the people participate in the markets. So there is a huge backlash for US president from the common citizens of the US. So that is why he has to announce some exemptions at the weekend. RBI has announced a 25% basis point rate cut in the MPC meeting. Policy stance has been changed from neutral to accommodative, indicating further rate cuts in future and supporting the growth in the economy. Investors should hold on to their investments. Mutual fund investors should continue their SIPs as this correction benefits them, helps them to get more units at lower NAVs, and for long-term investors, it is beneficial. That is why I always say that mutual fund investors should do SIP and they should continue their SIP during the market fall. That helps them to get higher returns in the long term. So this is all for this week. If you like my video, please share with your friends. You can subscribe to my channel. You can ask your questions, which I will reply. We will meet again next week. Thank you.